And if we learned anything in the past 2 years, it's that science, it's that modeling, it's that mathematics, it's that all the sophistication of physicists who are in the background coming up with these wonderful models are wrong. They got it wrong. And that's the lesson to be learned of the last several years. What I want to talk about are my rules of trading. And I try my damnedest to live by these rules. I trade every day for my own account. I'm in the market all day long trading for my own account. I run a fund, a note, I'm supposed to say. The lawyers tell me I have to say it's a note. So if you're any lawyers out there, I didn't say fund, I said note. Okay? I run a note in Canada. We have a new ETF coming out that will be run the same way, and I'm going to be running some money for some of the more famous people in the hedge fund business. So I have my money at risk all the time. I will leave you with one thing. Don't trust anybody who doesn't have his own money at risk. Ever again. All right? That's important. After 35 years of doing this, I think I've distilled this to a couple of rules that really do guide me. This is the first rule. Never, ever, ever, not ever, should you ever, ever, not ever, never, ever. Am I clear? Yes. Ever, ever add to a losing trade. Ever. Never. The great disasters in this business always occur by people who add to losing trades. Don't do that. You have no idea how far down is once down gets started. Nor have you any idea how far up is once up gets started. And because you haven't any idea, when you add to a losing trade, you're dead. Dead. Perfectly, totally dead. I love to use the example. Let's transport ourselves to 1974. The world was in a rage of inflation. Commodity prices were going sky high. The news media was filled with information that inflation could only get worse, the economy was only going to get worse, that you had to buy commodities. Sugar was selling at $1.25 a pound. Many of you have heard the story before. I'm sorry. I love the story. You're going to hear it again. Sugar was selling at $1.25 a pound, and the news was clearly the Cuban sugar crop was going to be wiped out. There were never going to be any more sugar beets grown in the western part of the United States. The sugar beet crop in France and in Russia was destroyed. Sugar at $1.25 was a bargain, and you had to own it. So you bought some. And it went to $1.10. Well, you got to buy more at $1.10, don't you? Because it was $1.25 only 2 weeks ago, and all the fundamentals were bullish, and they're still bullish now. So if you buy more at $1.25, if it just gets back to $1.17, you can break even, which is nice. Till it went to $1. Well, at $1, you got to buy more sugar, don't you? It was $1.25 only 4 weeks ago, and the fundamentals are still fairly bullish. There's some news that might be bearish, but basically the news is still fundamentally bullish, and the Cuban sugar crop is going to be destroyed. And if I buy more at $1, if it just gets back to $1.12, I can break even, which is nice. Till it went to 75 cents. Well, at 75 cents, you got to buy more sugar, don't you? Because now the fundamentals are starting to get a little bit bearish, but if it just bounces to 85 cents, I can break even, which is nice, till it went to 50 cents. Well, 50 cents, you got to buy more sugar, don't you? It was $1.25 only 3 months ago, and yes, the fundamentals are now starting to turn somewhat bearish, but if it just gets back to 75 cents, I can break even, which is nice, till it went to $0.25. Well, at $0.25, you got to buy sugar now, don't you?
Double down.
Got to double down, don't you? Because if it just gets back to 35 cents, I can break even. And yes, now the news is in fact bullish. The Cuban sugar crop is going to be made, and lo and behold, there are sugar beets going to be grown in the western United States, and the French sugar crop is going to be okay. But if I just buy it at 25 cents, if it gets back to 35 cents, I can break even, which is nice, till it went to $0.10. Well, at $0.10, you got to buy sugar, don't you? You just got to buy sugar at $0.10. It was $1.25 only 7 months ago. And yes, the fundamentals are now overtly bearish, But if it just gets back to 20 cents, I can break even, which is nice. Till it went to a nickel. Well, at a nickel, you gotta buy sugar, don't you? You just don't have a choice, because it was $1.25 only a year ago, and yes, now the fundamentals are overtly bearish. In fact, not only is there going to be a Cuban sugar crop, but it's going to be a record. But if I buy more at a nickel, if it just gets back to 20 cents, I can break even, which is nice. Till it went to 2 cents. And at 2 cents, you know what happened back in 1975? Because now we've gone past 74. In 1975, people took delivery of sugar on the New York Coffee, Cocoa, and Sugar Exchange, bought it, and back then they delivered it in 100-pound burlap sacks. People took delivery of it, cut the burlap sack open, dumped the sugar into the East River, and sold the sack. Which was nice, until burlap became oversupplied. True story. Sugar went to a penny, and it stayed there for a long time. So the point being, you don't know how far down can be until it stops. Now, I love to tell that story in Canada, because when you go to Canada, you can tell them, you know, put a chart of sugar on the wall, 1974 to 75. Oh, and get a chart of Nortel, the largest telephone company in Canada. Put that chart on the wall. Walk 30 feet away. You can't tell the difference. They look the same. Nortel went from 120 to $1. $1. And it stayed there till it went bankrupt. Now, if you just bought one contract of sugar at $1.25, yes, you're going to lose, what, $100,000. I don't know, to you, that might not be much money. To me, that's a lot of money. But if you only bought one, if you only did it once, even if you sat through the entire losing trade for years and just kept rolling it over, at least all you'd have lost is $100,000. But it's the adding to the loser that is the killer. Don't do that. Don't do that anymore. Don't average down. The worst words in the business that we hear all the time, write this down. This should be a 4-letter word, value. There is no such thing as value. If they want to take something down, they're going to take it down. When they raid the house of ill repute, the good girls and the piano player go to jail. Remember that. It's important to understand that. There is no such thing as value. So if you buy something at 30 and it goes to 20, don't buy any more. I would tell you should be selling it. The best I can get across to you is at least don't buy any more. Who knows who Nick Leeson is? Anybody remember Nick Leeson? Who was Nick Leeson? Bearings. What did he do to Bearings? Destroyed them. Wonderful person, Nick Leeson. Old client of mine. Lovely man. Loved him a lot. Nice guy. He was a subscriber to my newsletter. I stand here in front of you and tell you that the trade that buried Bearings was my idea. I gave it to Nick. Okay? Now, how many idiots would stand there and tell you, I gave Nick Leeson the Nikkei versus the JGB trade that buried Bearings? I do. I tell you that. Why? Because after 2 days, the market was telling me that I was wrong. And how did the market tell me that I was wrong? I was losing money. It's that simple. The market told me I was wrong because I was losing money. I got out. Nick did more. And Nick did more. And Nick did more. And Nick did more. Don't add to losing trades. Stop it. Long-term capital management. How I love the story of long-term capital management. 3 people who were Nobel laureates in economics. 5 guys who, if they hadn't worked at long-term capital management, probably would be Nobel laureates in economics at this point. But how did they go bankrupt? They were convinced, because they were Nobel laureates in economics. They believed their own bullshit. Okay? That was on tape, so you have to probably edit that. They believed that they knew more than the market knew. The market is the sum total of the wisdom and the stupidity of everybody who trades in it. But they thought they knew more. And so when the trade went against them, they would hold a committee meeting. And they would say, we are 3 Nobel laureates in economics and 5 people who are likely to become Nobel laureates in economics. We clearly know more than the market does. Let's do more. And they would. And the market would go against them. And what would they do? They would hold a committee meeting. We are 3 Nobel laureates in economics. We must know more than the market does. And 5 people who are going to become Nobel laureates in economics. Let's do more. And they did more, and they did more, and they did more. Every disaster, every single disaster in this business is done by adding to losing trades.